China just quietly pulled $500 billion out of the financial system that helps keep America running. And I'm not talking about stock markets, trade wars, or headlines you see on cable news. I'm talking about US Treasury bonds, the debt instruments that fund government spending. Over time, China has reduced its holdings by more than $500 billion. This didn't happen in a panic. It happened slowly, deliberately, and mostly out of public view. I've spent a long time studying economic shifts like this, and I need to be honest with you. What I'm about to explain matters more than most political arguments you've seen recently. This isn't about one election, one policy, or one country. It's about the foundation of American power and how that foundation is starting to change. If you stay with me through this explanation, you'll understand something very few people do. Why the next decade is likely to feel very different from the last few years. So what actually happened? For many years, China was one of the largest foreign holders of US Treasury bonds. At its peak, China held more than $1.3 trillion in US debt. Today, that number is much lower. Compared to its peak, China has reduced its holdings by over $500 billion. That is $500 billion that used to help fund US government operations and budget deficits, and is no longer doing so. When we talk about treasury bonds, we're not talking about abstract financial products. They're basically IOUs from the US government. When the government spends more than it collects in taxes, it fills the gap by selling these bonds. Foreign countries buy them and lend money to the United States in exchange for interest. Think of it like a credit card. Instead of a bank lending you money, other countries are lending money to the US. This system works as long as lenders are willing to keep lending. The problem arises when the biggest lenders begin to step back. And that's exactly what China has been doing. This wasn't a sudden move. Data from the US Treasury shows a clear pattern. Year after year, month after month, China has steadily reduced its exposure to American debt. This was a strategic decision, not an emotional one, and it sends a message to the rest of the world. To understand why this matters, we have to go back about 50 years. In 1971, the United States ended the gold standard. Before that, the dollar was backed by gold, which limited how much money the government could create. Once that system ended, the dollar was no longer tied to a physical asset. Instead of collapsing, the dollar became the world's reserve currency. Countries around the world began holding dollars as savings. International trade was priced in dollars. Oil was sold in dollars. Global transactions flowed through dollar-based systems because the US economy was large, stable, and trusted. This gave the United States a unique advantage. It could spend far more than it earned without facing immediate consequences. While most countries would face a crisis if they ran large deficits year after year, the US didn't, because the world kept buying its debt. The United States makes up a small share of the world's population, yet it consumes a much larger share of global resources. That's possible because of the dollar system. America buys more from the world than it sells, and other countries recycle those dollars back into US debt. For decades, China played a central role in this cycle. Americans bought Chinese goods. Dollars flowed to China. China used those dollars to buy US Treasury bonds. It looked like a win-win arrangement. But beneath that arrangement was a power imbalance. By holding large amounts of US debt, China was financially exposed to a system controlled by its strategic rival. That risk became very real in 2022. When Russia invaded Ukraine, the US and its allies froze around $300 billion in Russian central bank reserves. Regardless of how anyone feels about that conflict, the message was clear. Dollar-based assets can be frozen or restricted under certain political conditions. For countries watching from the outside, this changed everything. It proved that holding reserves in dollars comes with geopolitical risk. From China's perspective, the situation became obvious. The US openly describes China as its primary strategic competitor. Trade restrictions have increased. Technology access has been limited. Military alliances in Asia have expanded. And all the while, China held massive amounts of US debt that could theoretically be frozen. So China began to reduce that exposure. But China didn't stop there. It also started building alternatives. It expanded its own cross-border payment systems. It pushed for more international trade to be settled in yuan instead of dollars. And it significantly increased its gold holdings. Gold can't be frozen, sanctioned, or created by another government. Selling Treasury bonds wasn't just a financial move, it was a strategic shift away from reliance on the US-dominated system. And China isn't alone. Other countries have started diversifying as well. Central banks around the world have been buying large amounts of gold. Some countries are settling trade in their own currencies instead of dollars. Economic groups outside the traditional Western alliances are growing in size and influence. The dollar is still dominant, but its share of global reserves has been slowly declining. This doesn't mean the dollar is collapsing tomorrow. These kinds of changes happen gradually and then suddenly. So what does this mean for the United States? The US runs large budget deficits and carries a massive national debt. As interest rates rise, the cost of servicing that debt rises too. If foreign buyers reduce their purchases of US bonds, someone else has to step in. That leaves a few options: cut spending, raise taxes, or rely more heavily on the central bank to support government borrowing. None of these options are painless. When governments rely too much on money creation to fund themselves, inflation becomes a risk. We saw this during the pandemic. Prices rose sharply, wages struggled to keep up. People who rely on savings and fixed incomes felt the pressure the most. This isn't just an abstract economic debate. These forces affect everyday life. If the dollar weakens internationally, imports become more expensive. If debt costs rise, there's less money available for public services. If inflation persists, saving for the future becomes harder. If the global economy fractures into competing systems, supply chains become less reliable. I'm not saying this to scare you. I'm saying it because the assumptions many of us grew up with are changing. The idea that American financial dominance is permanent is no longer guaranteed. So where does this lead? One possibility is a managed adjustment, where the US remains powerful but shares more space with other systems. Another is confrontation, where economic pressure and financial tools are used more aggressively. A third possibility is crisis, where something breaks suddenly and forces a painful adjustment. The most likely outcome may be fragmentation, where the global economy slowly divides into separate currency and financial zones. None of these paths are certain, but the direction of change is becoming clearer. Before I end, here are the key points to remember. China has reduced its holdings of US Treasury bonds by more than $500 billion through a deliberate strategic process. The freezing of Russian reserves in 2022 changed how countries view the safety of dollar-based assets, and the United States faces a long-term math problem with rising debt, rising interest costs, and fewer guaranteed foreign buyers. This isn't a short-term story. It's a structural shift that will shape the global economy for years to come. I'd like to hear your thoughts. Where do you think this is heading? Is this the end of an era or just a temporary adjustment? Share your perspective in the comments. If this explanation helped you see the bigger picture, consider subscribing. I'll keep breaking down complex issues in clear, honest ways. Thanks for staying with me. I'll see you in the next one.